always take smart and calculated risks. I only take smart and calculated risks. I know when to be patient and when to act on my trades. I am constantly improving my day trading knowledge. I easily adapt to new trends and shifts in the market. My mind is highly aware and focused at all times. I am 100% present when I am day trading. I keep a positive mental attitude no matter what. I live and breathe the markets. I love day trading. I have strong intuition for when to make great trades. Being a highly successful day trader is the norm for me. Making loads of money day trading is easy for me. I enjoy the process of developing my day trading knowledge. I continue to press on towards my vision and goals, no matter what setbacks may occur. I am naturally persistent and tenacious. Making money day trading the markets is just a normal part of my life. Money and profits are automatically drawn to me as a result of day trading well and consistently. I take full responsibility for my actions and my trades. No matter what my day trading results are, I learn and grow from them. My focus is entirely on the process of day trading and not on any particular outcome. I make money day trading every day. I am a profitable and masterful day trader. I become wealthy due to my day trading. I am a highly successful day trader. I am a skilled day trader. I take day trading seriously, and I am a master of it. I have a fine-tuned sense for knowing when to enter and exit trades. I always take smart and calculated risks. I only take smart and calculated risks. I know when to be patient and when to act on my trades. I am constantly improving my day trading knowledge. I easily adapt to new trends and shifts in the market. My mind is highly aware and focused at all times. I am 100% present when I am day trading. I keep a positive mental attitude no matter what. I live and breathe the markets. love day trading. I have strong intuition for when to make great trades. Being a highly successful day trader is the norm for me. Making loads of money day trading is easy for me. I enjoy the process of developing my day trading knowledge. I continue to press on towards my vision and goals, no matter what setbacks may occur. I am naturally persistent and tenacious. Making money day trading the markets is just a normal part of my life. Money and profits are automatically drawn to me as a result of day trading well and consistently. I take full responsibility for my actions and my trades. I always take smart and calculated risks. I only take smart and calculated risks. I know when to be patient and when to act on my trades. I am constantly improving my day trading knowledge. I easily adapt to new trends and shifts in the market. My mind is highly aware and focused at all times. I am 100% present when I am day trading. I keep a positive mental attitude no matter what.
Yo, what's up, everybody? Can y'all hear me okay? See everything okay? I had issues yesterday, so I couldn't do the live call here on YouTube. But yeah, hopefully today we don't have any problems. Hopefully you guys were safe yesterday. It was definitely a pretty interesting session. We found a bunch of moves, or not a bunch, but 3 moves. Ended up not really taking anything, but we called out 3 in the private group, and I kind of sent the result of that, some of the ideas in the free group and whatnot. So hopefully you guys had a chance to look that over. But yeah, today should be pretty interesting. Okay, Mike said all good. Yo, good morning, George. I appreciate you. Yeah, don't forget to like and subscribe to the channel. Definitely pushes me out. Gets us in front of people that do need to hear this type of stuff on these calls. So yeah, yesterday was pretty solid seek and destroy type of delivery. So it's kind of typical. All right, we had CPI yesterday. Yeah, CPI yesterday. Whoa, what the heck just happened? Today we have PPI. We do have SCOTUS. Okay, so that's going to happen. It says 10 a.m. I'm assuming that that's Eastern time, if I'm not mistaken. So even if it's not about, well, it's going to be about the tariffs. Like that's a conversation that they're going to come out with. So if they have a negative response to that, that means that the US has to give back all this money that we've accumulated. That would not be pleasant. That will not be pleasant at all. Who knows what that would do? I think that'd be pretty dramatic for the economy, because we're already using that money, from what I understand. So these are just some things that you got to keep in mind. They're going to be impactful, fairly impactful. So, you got to be a little bit cautious. What's up? I'm probably going to butcher your name. Vinette, welcome from India. I love my people from India. I have a couple students from over there. So yeah, welcome. If it's your first time, we have a lot of stuff that we discuss here on these calls. This is our live trading call of the week. Well, normally it's on Tuesday, but if I can't hop on Tuesday like yesterday, because I had some issues with the stream, I'll hop on Wednesday. And it's the trading call, basically utilizing some of the information that we talk about on Sunday, kind of continuing to walk price forward, discuss invalidation. I mean, we talk about so much stuff on this channel. So be ready to learn. It's definitely a learning focused environment. I don't necessarily give signals for those of you that may be new. I do point to where price is going to go, and I kind of push you to make your own decisions because I'm not a financial advisor and this ain't financial advice, right? But for the most part, if you stick around and give the content your attention for at least, a week to a month or more, you'll see that week to week, we're generally correct. I did it all year last year live. I'm live every single day with my private group, and some of them are here with us right now. But it's pretty amazing what we do here, that's for sure. So welcome, Vinette. Hopefully I'm saying your name right. Sorry if I'm not. Let me see. Mike said, I think a lot of business would like payback from the government for what they had to do to keep prices low. I think that's a fair statement. I think they would, but at the same time, we need to pay our debt off. And so they're going to probably have to figure it out. And they're getting tax cuts, so they got nothing to really complain about, really. More so, the normal people get tax cuts, but I think they all have enough money. I think it's about time we get a stimulus check from the tariffs as U.S. citizens. Still waiting on that, but if it can't happen because he's going to pay for majority or more of the debt, and that ends up being the reason why he doesn't give the payment. That's fine too. But I think any of us would like that little stimulus, right? So yeah, again, last session yesterday, there was seek and destroy nastiness that took place. Those of you in the private group and those of you in the free Discord, you got to see some of the ideas that I pointed out. I pointed out the final short in the private group and I believe real time in the free group. We definitely called out numerous opportunities. Well, 3 opportunities, 2 buys, if I'm not mistaken, and then a short right in here, right? So we called this higher, right? Just to see if we can continue to hold on to that, see if it can get up there deeper. It eventually failed, right? It did take out the previous day's high. It set equal highs up there. But you can see going into, the PM session, it ended up kind of falling off. But you could see that the new day opening gap that I've been pointing your guys' attention to for the last couple of weeks, well, last couple of months, honestly. Well, it's the last couple of months. Let me see. Let me double check that. One, 2, 3, 4, 5. So yeah, like 5 weeks. So basically like a month and a week. We've had this regular trading hours gap, which is right here, highlighted because it's empty, right? There's nothing there when you go to regular trading hours. Just jump to that real quick to kind of show you what it is. So it's this little gap in here. And, you know, we've talked about a lot that kind of kept us aiming for buy-side liquidity. I'm not going to get into all of it now, like the narrative being bullish. I'm not going to get into all of it because it's a lot. But essentially we see, you know, if I want to get to it kind of quick, we see a bullish order block here, right? We see a failure to leave this breaker intact, which this low to that high, if you go to the weekly chart. Okay, I guess I did that on the wrong, the wrong chart. But yeah, this right here, when we got down below it, we were watching this. And then once it violated that and turned it off and we changed state of delivery, we kept trying to go higher. And you could see weekly order block held, right? The wick here has held. So that's the justification as far as why I thought that these were going to be pretty significant. They may end up, you know, still being significant. We're going to have to see some strong displacement. Okay, let me get off the regular trading hours. So we're going to have to see a little bit further strong displacement back above this 4-hour fair value gap. Otherwise, I've also mentioned throughout this week that if this gets lost, there's a pretty strong chance that it may not want to hold up. The problem is we're still inside this daily order block, 50% level. So if it continues to hold this, it's going to be a similar thing to this delivery, right? How it closed above this order block's midpoint and the open. Again, we have this large wick in here that we've been observing, okay? And it kind of respected that. So again, that was another reason why we continued to push price to the buy side and haven't overall changed sentiment. You guys can see that I do have a contingency plan down here, right? We have the sell side liquidity. We have trend line liquidity, but that would be assuming that this daily order block 50% level ends up getting closed below. Again, this is an early sign with how rapid this was, this repricing lower, basically filling in this whole entire fair value gap here and kind of breaking through this 4-hour fair value gap, which is now turned to, at least for now, an inversion. Okay. So we got to see if it runs back into that and then we break down below this. I'm as close as we can possibly be to positive that it's going to go lower, right? We have this 1-hour fair value gap here. So again, this is also in line with this being inverted. So if we can hold this, if this up candle here can't even trade to the 50%, right? If this current delivery can't even get to the 50% and it starts to fall aggressively, and then of course, if we can get down below this too, that would also be a justification as well for us to try to continue seeking potential sell side. And the sell side here, if you can look, is here as well. And we also have the wick in here. So again, you can imagine if this low gets taken out overall from this daily chart, that changes the sentiment for me. It changes my opinion, right? It'll make it so the contingency or backup plan that price goes down below this and starts to seek sell side now, off the heels of also having the SMT here, right? All of that would start to align with more interest to want to go to the downside if we can get down below this. But again, we have early signs that may manifest. We do see that we've taken buy side here. We have another SMT. Okay, SMT here. If we go to the month, I think there's a monthly SMT too. Yeah, the monthly SMT is there as well. You can see the higher high, lower high. If we run to, or if we jump to the DXY here, so that if we go to the DXY here, we could see this may look to continue to want to go to the buy side. Okay, if we take some of these markups off, we got change in state of delivery here. If it was going to be overwhelmingly bearish, it would not have really jumped like that. The only way that I'm going to be overwhelmingly bearish again on the DXY is if this breaker candle, this low, and this wick 50% level gets traded through, that'll put me in a longer term bearish sentiment. So until that happens, I think that this is going to still run higher. That is fully supportive of this respecting this inversion for value gap, and then potentially looking to see if price can go lower, possibly seeking these trendline liquidity pools down here. Okay, so hopefully that makes sense. That is my justification for the landscape here and what I believe could take place, right? It could stall out here. Now, if we invert this, say it gets above this, and then it gets above this 4-hour fair value gap too, that puts us in position to continue to try to seek buy side, and then we'll think market maker buy model, second stage distribution up here, and then we'll look to finish off the rest of the liquidity up here that hasn't had any trading, right? The gap's up there. And then we also got a high up here that's available. We can also see how this 25% of the yearly wick, right? If we go to this time frame, go from this low to that high. Oh, whoops. Let me show you kind of like where those pink levels are, what they are. So the first pink level down here, it's a 25%, 50% of the yearly wick. So again, if it rejects that, we're going to look to try to attack some of this large candle in here, some of the previous yearly range. And so again, if you think power 3, if we're going to have a bullish year, power 3 generally starts the first quarter for the year as accumulation manipulation. Then the middle two quarters could generally be expansion. And then going into the fourth quarter, or sometimes before it goes into the fourth quarter, it starts the cap or the opposing end of the yearly range. Doesn't mean it doesn't rally a little bit, here and there, because there's a Christmas rally. Sometimes it just keeps ripping, just like how daily power 3s don't always, at the end of the day, turn aggressively. Sometimes they just lightly do it to place the wick, right? So it's kind of like a way that I frame out the whole entire year. That's how I think about the whole entire year. So yeah, so we're going to keep that in mind. So that's what these levels in here are. Okay, let me remove that now. Okay. So again, we're going to continue as the session unfolds, as we see these news events take place. We're going to see what it wants to do. Does it want to fully commit off the heels of that news event that was that's coming out, that was basically started here from yesterday, that basically came up, purged liquidity from the previous day's high and previous week's high. We hit the new day opening gap and then started a displacement that took some lows in here. So are we going to create an order block in here and then violate that? Is that what's going to happen? And if it, again, breaks down below this, respects these levels, and we also see DXY at the same time continue to hold this and maybe look to target the buy side up here that we've had outlined, disrespecting the breaker here, right? Then we'll be able to continue to trust that we may see a tip over, right? We see that the currencies are supporting that. If you guys remember on the euro, I talked about how if this high up here of the fair value gap on this weekly chart doesn't get taken and we stay below it and then we displace, closing below the 50%, then we should be able to continue and try to see the trendline liquidity get targeted. Okay, so that is some of the thoughts here and some of the more like overview perspective of all the different assets. Okay, so again, this news event's going to be pretty significant. Give me 1 second. I'm going to run to the bathroom real quick. All right, I'm back. Sorry about that. But yeah, so let me see what's in the chat. We got to start inverting higher time frame PD arrays. Yeah, exactly. At least to get back in line with it, because we have seen a pretty significant run lower that has inverted some levels that should have held if it was going to continue to run higher. On the higher time frame daily chart, it looks like it's, just starting to break down. Remember, we have the 3 PDA rule. So if we're going to change a narrative, we have to first of all do it from the higher time frame. And then of course we want to see PD arrays get disrespected on that higher time frame. Specifically 3 of them, because PD arrays for the most part are balanced price range variations. At least that's the way I look at it and how I see it. And when 3 of them get violated, because that's the case, how they're balanced price ranges, we're seeing BPRs get violated, right? And then we're seeing structurally that things may change. And instead of going from like internal to external, it's now going from external to a new external now, right? Or stops to stops, instead of like inefficiencies to stops, inefficiencies to stops, so on and so forth, okay? So again, this here would end up becoming a stops to stops delivery if it takes this low out. It's also 3 PD arrays. This high to that low should be able to act as a BPR, which it has. This wick that we were watching or have been watching, as it traded into it, it broke through it. So that created another balanced price range idea, right? So if this range equilibrium, this high to that low, and this high to that low, the 50% of that wick is violated, right? That's 2 things, right? Already in itself. Then we have the order block, then we have these wicks in here, then we got the low, then we got volume imbalance, which is a new week opening gap. Then we got another one down here, but that's a little bit far. We got another new week opening gap in here, right? So if you drag that over, it's right up in this area here. Let me actually probably mark that so we have that on the chart. Let's see, because it's in close proximity, right? So this is part of why this indicator here is so valuable, the Sunday marker. So it marks off Sunday, because then you get to see quickly, okay, here's a high, right? Where's the low? Here's the low. That's previous week's range, right? This is a previous week's range. This is a previous week's range. And right at that gray area, you could start to identify each new week opening gap. Just without needing to go to the lower time frame, you could see it. Are we around a bunch of new week opening gaps? Right? You can consolidate that thinking, and it happens pretty quick. And, it puts you in a pretty good position. So let me rewind this real quick and go down just to make sure if it'll load. Jeez. See, let's get a more accurate reading. Exit the replay. So yeah, you can kind of see where that's at. It's literally punching into it, right? Which is pretty interesting. If you weren't looking back and seeing that, you wouldn't identify that this reaction makes sense now, right? It makes sense why it's stopping in here. Not only is it the new week opening gap from a while back, it's also a 2-day inversion fair value gap. So we can kind of understand how this, if it was bearish, this is an opposing PD array that makes this make sense. Right? Again, the only way that I'm going to really get back into trusting a potential buy position is if we can really start to like ramp up to the buy side, because we have possible bullish DXY, possible bearish SMT on the higher time frame. It's the start of the year. We just had news come out right now, so let's go take a closer look. But we have all these things, right? We have lower currencies, right? They're falling. So all these things are starting to justify. Plus we have an inverted 4-hour inversion, right? The fair value gap. We kind of rejected this high up here. And did we reach? No, we didn't. It actually hit the 50% of this new day opening gap in here, which is interesting. Yeah, it basically hit. Look how perfect that was. Like that's that's amazing to see that. So yeah, this high to that low, because we got down below it, it should act as a BPR if it is going to be bearish. So if we map this out like this and we put the 50% level, that 50%, isn't it ironic how that 50% level is right above the inversion, which I said if it gets above that, I'll be back in line with being confident with bullishness. Isn't that interesting, that confluence? Interesting stuff, right? So again, if this holds in here, we've already broken down through a level that I've mentioned could end up being our validation level, right? We have the daily chart invalidation to be 100% certain. It's going to be this low here being violated. We have the wick here, the order block, and the swing low, let alone the new week opening gaps and other things that we have mentioned here, right? So again, if price displaces and gets up here, we'll think about that as a second stage distribution zone up here for this market maker buy model potentially. For now, though, it looks like it's creating a nasty looking potential market maker sell model. So until that is proven that it's not going to do that by basically breaking up above here, I'm going to continue to start today, at least leaning towards more of the sell side being targeted. And again, we have Supreme Court conversation. We have the news that just came out for PPI. Okay, who really cares about the numbers, right? It's just all excuses, and it's late anyway when it shows up. But yeah, so we'll see what happens in here. I'm not going to look for any entries until macros. We're still on the week of CPI. So just like NFP, FOMC, once those news events are placed in the economic calendar, the whole week has an opportunity to be a little bit more tricky. Does that mean you go in fearful? Does that mean that you hesitate if your model shows up? I wouldn't. I would just keep your risk minimized, right? If you risk 1%, for example, I'm not saying that you should risk 1%, but if you risk 1% and see any of these news events are up, or we're at the start of the year, or like the start of a new month, or if we're at the start of a new quarter, you want to cut your risk by at least 25% of what the normal risk would be. So instead of 1%, it would be 0.75% or 0.5%. Why is that? Because the risk is higher. The likelihood of a chaotic manipulation is higher. And anything can happen on these types of weeks, right? During these certain times of the year, certain times of the week, certain times of the month, right? Certain times of the quarters, right? The new start to the quarter, because Power 3 happens on a 3-month basis too for the quarters. So, around those moments, you got to cut your risk. That's dynamic, regressive risk management. And if you take a loss, you cut your risk a little bit more, so then you can manage the downside. So yeah, we're getting a very nice reaction here. I think it's supporting, for now, pre-market, the idea that this low may get targeted, right? I started the whole entire day thinking this, right? Unless it was to get up here, that would change my opinion. But if this continues and we get down even below this new week opening gap, depending on how it trades through that new week opening gap, this may end up becoming a resistance level. This wick in here, if it breaks this low, I'll look at that as also a piece of a balanced price range. And so the 50% of that, in terms of institutional order flow, if this is going to continue to drop and target this low here, it's going to have to stay below that 50%, or I'd prefer it stays below that 50% of that wick right there, okay? And that's just part of reading order flow. And then up candles should get respected when they're traded through. Like to start off, this one here potentially is going to be respected. Something I want to point out as well. So yes, there's gaps in here. those of you that are in my private group, can you explain to everyone, if you remember, of course, what? Hold on. Holy crap! Right? Can you guys explain to people in the group or in the live call that may have not heard this before? Why would this upper portion of this fair value gap or this upper fair value gap not really need to be traded to if this is going to be bearish? What in this chart right here would stop that or prevent that because it leaves behind a BPR? What would be stopping that? Where, would it be here, right? Would this wick basically trading into this gap, right? Would that be the brick wall stopping price from getting up into there, right? Would that be a reason? Let me know in the chat. Would you agree with that information? Right? If this down wick in here, this trading that happened inside of this gap, assuming that this is going to continue to be bearish, would it make sense for this to be left available because it was already trading in there? Based on what you guys have heard me talk about, would that be a true statement? You guys in my private group hear this all the time about this topic, but would that be true for people that may not have heard it before? Let me see. It looks bullish daily. Fractal high. Day looks like we're making a. Yeah, I think that's a true statement too, Mike. Okay, George says true. Absolutely. Right? That creates a balanced price range. If there's trading and there's a fair value gap here that got like displaced, right? Displaced to it, but it left a fair value gap that's below that price action, that is a form of a balanced price range too. Okay? Because there's buy side and sell side already happening here. It's just right here. So this retracement, we don't look for it if it's going to go lower. We don't look for it to go all the way up, right? And say the YouTube model showed up, which you can kind of make an argument that it kind of did here, right? There's a run on stops, shift in market structure, fair value gap here, fair value gap here. ICT says that you can afford to put your stop up here. In this instance, because there's two fair value gaps. In this instance, it's unlikely if this is going to be bearish, if this is going to be a viable move lower. It's unlikely, pretty highly unlikely, assuming bearishness, that this is going to be traded to because of this previous price delivery. That leaves behind a balanced price range because both sides are offered. And if this is your first time hearing this concept, I encourage you to be a madman today, or madwoman, if you're a female watching this, to go and watch this take place constantly. Go and observe. When a fair value gap is left open in the examples that you look at, look to the left. Is there a wick? Especially if there's a wick that goes through it. Like if this candle wicked through this, but it left this fair value gap on whatever time frame you're looking at, and price goes up, doesn't reach into it, and then it declines, it's because it's already offered delivery there. It's already fulfilled whatever it was trying to do in that area. Okay. So again, I don't, for bearish, if this is going to, in fact, look to target the trendline liquidity down here and potentially try to blow out that low, it should not want to come back up above this area in here. So again, with that being a fact, because it is a fact, and, don't take my word for it, right? But, go study it, and then you'll see that this is a fact. But because it's a fact, that's an early sign that bullishness may continue if it breaks through it. Because now something that should have been bearish conditionally is not holding, right? Regardless of the signs that we're seeing. So if that gets above this 1 hour fair value gap and then inverts this 1 hour fair value gap, which is it's not all the way over there. It's right there. Okay, so if this gets above this and inverts that, especially if we take out this swing high, we'll look at that as a stop run, deep discount retracement, shift in market structure, and then we'll see the inversions happen. And then, of course, up here, we'll look at second stage distribution and get in line with that. Again, but for now, what we see currently, price is trading inside of this daily order block 50% level. So that's what's kind of got me a little hesitant to really try to engage anything right now. Plus, we're outside of a macro. We're also pre-market. So again, I'm just going to wait, given the news that we've had this week, given what's available to us in terms of news that's coming, which we got the Supreme Court. We have a lot of stuff happening, and plus we're inside of a range at the moment. So again, we have to be extra cautious and not be a madman, because yesterday I got a lot of messages from people getting chopped up in here, right? Students outside of my private group. We didn't get chopped up, right? But it's unfortunate because they push too hard in times when they shouldn't. And right now, we're still not out of the woods yet. You know, we may end up opening up, right? And then, of course, we got the levels down here that we're looking at. But we got to wait for the time element, which is inside of a macro, preferably beyond the New York Open price window, or time window, I should say, right? So we got like, what, 40 minutes until that takes place. But yeah, if we can get this to close, let's see, 4 hour. Yeah, if the 4 hour here by 7 a.m. can close below this, and this will basically just be a wick, right? If this is all it does, you can see it even more clear here. You see the wick that goes through this gap in here? The whole upper portion of it already has trading. So they're not needing to offer price up into that level there. Okay. And so you can kind of see that. And if this tips over, again, if you haven't heard this before, that's going to reinforce that this is a crazy gem that you've been missing. That's not really talked about a lot. ICT doesn't explicitly say when a wick goes through this and there's a displacement that that's a balanced price range you could trust, which is a reason why the fair value gap is left open. He doesn't say it explicitly like that. He makes you go find it. And luckily for you, I did the work to find that. So now you guys have access to that insight. You know, it's one of the most powerful things that I've learned in the last 6 years, right? Balanced price ranges in general are super, super powerful to understand. And there's many variations of them, right? Like the PD arrays, like stuff like this, okay? It's very detailed, telling you institutional order flow. And it's telling you the story that the language is speaking of the market, because that's what this is at the end of the day. If it's an algorithm, if it's a code, it has a language, right? So that's kind of what you're seeing on display here. So yeah, I mean, you know, to the naked eye, right, you can kind of see that this is pretty much the most available liquidity, unless you, of course, zoom out and then look up here, because that would be the most relevant liquidity. I'm only going to like this again because we were looking for that, but I'm only going to like this again and be on the side of that being targeted soon if we can get back above some of these levels that I mentioned. We need to get back in line with bullishness. For the moment, we're not necessarily in line or in sync with price going with the trend yet. It's in a retracement period, possibly, with early signs that it may not, in fact, complete the run back above those highs. Okay. So we're in a situation where we got to wait for more information, unless you want to be aggressive and try to get ahead of this and try to short. But I'm not going to do that. Right? We're in a level where there's just too much stuff kind of hanging around here. It's creating high resistance liquidity run. So I want to see it kind of open up a little bit. Let's get this to confirm. If it breaks down below this, you could simply move up in time frames and see that as a bearish order block. And then again, if it gets a trade into that and your model shows up, maybe on like the 1 minute or so, you could then try to position yourself and see if you can't catch a slide going lower, right? So yeah, we'll see what happens in here. And it looks like we have stop run, higher time frame PD array, reason for the upper portion to be left available, shift in market structure here. On this 1 minute chart, there's no fair value gap, but if you go to the seconds chart, I'm sure we could see something taking place in there. Was this our London low? Yeah, it's our London low right there. So London low. This is a high resistance signature. Why? Because it took the stops first. If it would have left the stops like this one did, right, with the Dow, that's a low resistance signature. This is high resistance. High resistance. So we may see the Nasdaq and the S&P have a little harder time getting down there. Does it mean it won't get down there? I think it probably will. Right, unless of course it turns and gets up here, and then of course we have to adjust. But for now, my main assumption is going to remain seeing if we can't get down below here, especially with DXY. Why is that? See, our gold call out was also very accurate. The market maker buy model completion, continued run, holding up above these levels. Kind of a nasty mess in there for now, but silver did really well too, off the same idea. Is there S&T here? No. So yeah, we got things starting to bounce here, which is interesting. But again, we have a pretty nice overall situation, seeing how the upper portion of this fair value gap was rapidly responded away from going with the down movement. So I'm going to still remain trying to see if we can't target the sell side. We're also, I think, below now the daily 50% of the daily order block. Okay. So now it seems like it's inverting it a little bit. Another gem, every single PD array has an inverse characteristic. So if you have any PD array that gets invalidated, you could just simply, if there's an argument to be made for the other side, you could simply look to see if it can invert and then try to catch something going the other way. Of course, you want to practice that. You don't want to just go in assuming that without studying it. You shouldn't do that with any concept, with any mentor, any person you learn from. Before you trade something, you should learn it and then validate it by going in and doing it on your own. Or, doing it on your own plus watching in real time how we do this every single day. For you guys here on the YouTube channel every week, twice a week. Put in my private group every day. So, yeah. So we're going to keep watching this. Again, my assumption is that this is going to become lunch, okay? It's going to get eaten up. So you can make an argument with this wick in here, right? Low, high, lower, low. That should be leaving behind basically a balanced price range, right? So if this was the idea that we were going off of, 50% of this low to that high, 50% of the wick here, price, the actual candles are closing below the 50% level. The wick starts here and it goes all the way down. You could see it couldn't get all the way through the wick. If I zoom in a little bit, you could see it a little better. And this here, low, high, looking to target the low, created a market maker sell model on this 1 minute chart. So if we get down deeper like where we're at here, to finish this off, if it's going to go down and break that low, this should be very rapid from this area, because we got the accumulation, reaccumulation, smart money reversal, first stage distribution, possible second stage distribution here. And then we should end up seeing it go lower. And again, if that doesn't happen and it fails and it breaks this high here and inverts this fair value gap, my whole entire perspective will get back in line with the bullishness, because we haven't hit our 3 PD array invalidation yet for the daily chart. We're really starting to. We're not respecting this wick. We're starting to dig into this one. We are breaking through the 50% of this order block. It did do it once already, so that's why I'm a bit hesitant on it until we were to fully confirm the sell side by breaking this low. Then we could also see this low to that high. If it gets down there and trades back into that range, this low to that high, breaking down below the low, created a BPR at that point. Both sides are delivered. It would also leave behind a bearish order block. right? The up candles there. So you can kind of start to see this happens all the time, constantly, all day long. Like this perspective, this way of price delivery, creating balanced price ranges all over the place. And the goal, or, you know, what the goal should be is to try to get comfortable with seeing it this way. Because once you understand it, it's like you can identify blocks in price, how it's building up one side or building down the other way, right, to the downside. And then when one of the blocks gets taken out, the balanced price range or balanced price ranges, if it gets taken out the other way, PD arrays being violated, for example, you could start to make a decision going the other way real time. This is highly effective. This is how I'm able to call bias and narrative continuously. And for the most part, we're correct. And if we start off and our move is invalidated, this is part of the reason why we can shift and go the other way and be confident about it and not really be too concerned about, missing a move or taking a loss. Because if we take a loss, it may be telling you that the other way is possible. Unless, of course, you just simply get stopped out because of manipulation, right? Just like a wick or something. But outside of that type of event, this helps you real time, right? It keeps you kind of locked into what is being spoken to you by the algorithm, right? Just reading the PD arrays and whatnot and everything else that we talk about, right? It kind of just meshes well with everything. And it meshes well with every single model. This is one of those universal things. Doesn't matter what you use for entry. The idea of balanced price ranges it's definitely one of the most effective things you could learn, but it's not talked about a lot on purpose, I feel like, because it's too good. It's too good. But you guys in my private group and here on this YouTube channel hear about all these really interesting things that most people don't talk about. Even ICT traders don't talk about a lot. Some do, but they don't put a lot of emphasis on it. What's up, Joan? Good morning to everybody that I may have not said good morning to. Again, don't forget to like the video, subscribe to the channel, you guys, if you get value. If you got value, within the last 20 minutes, definitely go ahead and like that video. Because this stuff is definitely life-changing. What is going on with my broker right now? I thank you guys in advance for doing that. Why is this doing this? Okay. But yeah, let me see. Because prices both sides. I think that was an earlier comment. Let me see. Did I miss any questions? Doesn't look like it. Well, that's weird. I can't scroll the comments. It's strange. Okay. So yeah, what we see in price here, like I said, as we're watching price with this, again, this is going to be something that upsets the interest as we go into the open for price to go lower. If it was to get deeper up into this, we're going to have to pull back a little bit on the assumption that it's going to go lower. But for now, I'm going to keep the opinion that this low should get targeted at some point. This fair value gap in here. Okay, we're going to watch it. If it gets traded through, given the balanced price range idea, we have sell side and then buy side offered. So if it comes back down into that, we should look at that if we're going to trust buys in that instance, or if it proves it by displacing. This will have proven to be a piece of price action that gave you an early sign that price was turning a little bit. Okay, this is the 25% of the yearly wick. So you can kind of understand why this is being so magnetized, how price is gravitating to it pretty aggressively. This is a very, very high time frame PD array that we're now inside of. Very particular price level, right? 760. So again, if we were to break this high, to continue to try to build the trust that this is going to go higher or would go higher, if we're simply just looking at it from this time frame, we would have to see that respect the high to the low, the 50% level, and preferably stay above this fair value gap, right? And then see it continue to go higher. The magic in this idea also, this tactic, is that it's fractal. You can do this and use this on the daily chart too to help you confirm bias and narrative or continue to trust the bias and narrative, right? So I hope I was able to explain that clear enough for you guys that may have not heard this before. But this is something that is very, very powerful. Don't let it go over your head. Okay, it's not something that you really want to do that with. I mean, you can if you want, but it's just going to keep doing what it does, and we're going to keep being effective using this exact thing and all the other things, right? But yeah, I encourage you not to let this go over your head. So again, we're in a mode of waiting for more information at the moment. My opinion is that we're going to target the low here. And now we're watching this fair value gap. Is it going to be traded through and then invalidate the 50% of this, which would then make us look to the highs up here? Or are we going to continue to respect the initial idea, which is the fair value gap is being left available because we have trading here that's going to allow for this displacement, this upper portion to be left available. Also coming off the heels of this 4-hour inversion fair value gap being violated, right? And then all of that could potentially support us taking a nosedive down into here. And then, of course, if we break this low here on the daily chart, that'll change my sentiment, right? I will be looking to see if we can continue to build reason to want to target the sell side down here. And that would be supported by the DXY holding in this, so it has to hold this. If DXY was to smash through and break the 50% of this, get outside of this monthly fair value gap, which is right here. Let me take some of that off. You can see it clearly. It's right there. So if we were to stay above that, which is over here, which is right here, if we respect this wick 50% level, if we end up respecting the 50% of this order block here, and if we, never come back to these lower levels like this breaker, which already was used to push price higher, we'll continue to stay bullish and seek the buy side up here. All of what I just mentioned justifies this high being taken, right? We have a big run above this high. We have a respect to the breaker, respect to the 50% of this daily wick, okay? And I have the invalidation down here. Invalidation for me in this instance would, I guess it would stay in that area. Maybe move up a little bit. If we lose this monthly fair value gap, I'm not necessarily confident that we're going to have anything meaningful back to the buy side, and we may just be range bound if we do end up coming back up inside or coming back down inside of that. We are technically in a range for the DXY still. It's coming right back to equilibrium from this high to that low. Why this high and that low, not this low to that high? Well, because this high hasn't been taken really. So we don't have a new dealing range relative to this large range in here. Right, so yeah. If you're assuming that this is going to break this high though, right, you could get this low to that high, and then you can make an argument that in both of these ranges, we're really contesting the 50% as well as slight discount price level. This is also, I don't think this will go lower because this monthly fair value gap, it's definitely holding price where it's at. So again, this is my line in the sand down here. There will be red blinking flags or blinking lights going off in my head if we were not able to stay above the 50% here of this monthly fair value gap, which will also be violating the 50% of this wick here that has to hold if we're going to continue to justify buy-side delivery. Plus, we have this, is that new week opening gap? No, it's I think it's a new day opening gap in here. Okay, so breaking down below this level, there's 50% of the monthly, 50% of the wick, and then we have the volume imbalance and the swing low. So those are three PD arrays that would turn my interest off, at least in the short term, if it was to simply just come down below there until it would get back above the monthly fair value gap, assuming that, like if that happened, hypothetically, right? If we came down here, that's what my thinking would be. But for now, again, we're going to be cemented in the fact that we're watching this continue to hold, right? And I'm going to assume that this is going to hold. And with that being the case, we don't really have justification, at least yet, to try to seek buy-side delivery with the indices, specifically the Nasdaq, which also has the failure swing SMT here between the three indices, right? Again, price hasn't really done much. You can kind of see why my intuition to wait for the macros to come out, or preferably after the open, is being justified here. You can make arguments that, oh, what about this, right? And whatever London justification you may have, you can make a justification for that too. Like the highs up here, right? If you were a London trader. One thing too to keep in mind that I almost didn't mention just now is London session was super fast. That was a massive displacement. So going into the AM session, it could be a issue for us to try to push for further shorts. I say that if we break above, again, this fair value gap up here, if it was to turn around and go up through that, this profile would be called a London swing to New York reversal. London swings to a particular PD array or liquidity pool if price is bullish in this example, right? If it does remain bullish. We have a swing below the open price, rapidly trading down to a PD array that may justify a further reversal or further continuation, in this case to the buy side, for New York session. So London swing, New York reversal. That's what this would be, only if price was to get above this level here. That's something that I would consider for profiling purposes. I know some of you guys have been asking me a lot about weekly and daily profiles, so I'll just lay that out here. I think I'll do that at the start of every call now. Kind of give you my assumption going forward, because I'm getting a lot of questions about that topic. So I think it'd be useful for you guys. So yeah. So you can kind of see how this is being traded through. So I want to do this real-time study with you based on the fact that I explained this particular idea about balanced price ranges, like overlapping fair value gaps like this. That's an example of a BPR, right? Price going higher, going lower, taking out the low like this. We have buy side, sell side. That's a form of a BPR. It's also potentially an order block. Okay, it's a breaker, low, high, lower, low. Okay. So that should leave a balanced price range. But when we see something like this, right, it's overlapping, you definitely got to consider the idea of a balanced price range here. And again, if it fails, that's a wonderful sign. Like if it fails to turn around, it's a wonderful sign given the context of us trying to target the downside here. It's a wonderful sign that we are on the right side. And if it breaks down and wicks get traded into and respected like this one is, at least to the 50%, we don't want to see it go through the upper portion. That's literally telling you from the algorithm that price is holding the institutional order flow going lower. And then once that stops being the case, if you can make a justification from the higher time frame that price is going to turn around, then you can get in line with it going the other way, right? Again, I hope this stuff that I've mentioned so far in this call for the last hour has not went over your head about balanced price ranges and just everything that we've talked about. Because this alone, if I ended the call, is massively massively valuable, right? It's like literally shifting, right? Career shifting, and just at least clarity shifting, I should say. Maybe not career, because you have to manage risk properly. But it's definitely clarity shifting, right? In real time for institutional order flow observations. It's one of my most powerful weapons, right? Is this understanding. It took me about 3.5 years to really be confident with this, because I had to figure out all these intricate variations and details by myself, because there's nobody out here talking about this thing like these specific topics in ICT Concepts. ICT himself doesn't come out and just be, straight up clear like this. And it may not be his fault, right? There's no fault to him, because God bless him. He's amazing. And he gets all the credit. He's amazing for these concepts. But, the way that this is pieced together, the reason this stuff is important, a lot of times that's kind of a thing that's left up to the student to go figure out. And again, balanced price ranges are one of the strongest weapons that you can add to your arsenal. Remember, every PD array is basically a balanced price range, right? For the most part. Inverted fair value gaps like this. Why are inverted fair value gaps important? Why are they helpful? Why are they dynamic? Because it's leaving a balanced price range, right? That's something that most people that trade inversion fair value gaps don't say. They don't say it. I don't know why. They either don't know it, or they're trying to keep it from you to make it seem, like it's just the inversion and they're this or they're that, right? But that's the logic behind why inversion fair value gaps are so powerful. That's why PD arrays, if you look at them, if one fails, it's an inversion. And then if it was a balanced price range, for example, for this to go lower, if it gets violated to the 50%, that now inverts. So you look for it to be a balanced price range going the other way. And of course, you don't want to do this nonstop, just recklessly. But this logic, if you can build a narrative around it and do all the contextual things that I talk about on a regular basis here, you'll be very surprised at how quickly your understanding just spikes through the roof when prices happen, like unfolding real time. You can kind of see it's the initial ideas that we talked about, right? It's basically being justified here, right? It's not holding this as an inversion fair value gap, balanced price range to the buy side now. So that can be completely taken off the table unless it gets back above it again. But in this case, I don't believe it will. I think that we're going to target this, like I said from the very beginning. And again, from the fair value gap, why it got left open this 1 hour, why did it get left open? Hopefully now, with what I've talked about, you can explain that to yourself, right? And then hopefully you can understand why this is holding, what internally is happening relative to the technicals, obviously. We don't know exactly what's happening internally, but with the algorithm, with ICT Concepts, right? Hopefully this stuff is pretty clear why this is something that, unless it was to hold this and then displace through this, it's something that could be trusted to continue to go lower, right? This balanced price range is like your beautiful wall, right? Of just like defense of price going higher, right? It's continuing to go lower, right? It's protecting it, right? Protecting, right? So I just wanted to throw this out here too before the open comes. You guys may see this, which direction? That way? There's a QR code there if you're interested in looking at some of my private mentorship or private apprenticeship details, right? If you're someone that thinks that what I've just mentioned is valuable and you would like to see this type of stuff and go even deeper, I do this every single day. This exact thing that I'm doing every week, I do it every day with my private group. So if that's something that you think would benefit you, I have students that do well just on YouTube by following me on YouTube. That's fine. I'm not encouraging any of you guys to go and join. But if it is something that you think would be beneficial to you, and you would like to be around students and a mentor that does this, that proves this type of stuff every day, let alone every week here on YouTube, and you'd like to be a part of something like that and have that support structure and access to someone that can in a detailed way, answer all your questions, that's been doing this for 6.5 years, almost 7 years, and is a full-time trader. Definitely go check the details out on that, because I think it would really benefit you if you think that's something that you may need, right? Some students need more hand-holding than others. And if you think you can do it on your own and this is helpful and you're an independent trader already, maybe it's not for you, right? Although I encourage all of you guys that do have value that you can provide, we may expand later, so I may be, hiring good traders at some point. Maybe. It's a maybe, right? It's not something that is for sure going to happen. But that's something for the future that may be an opportunity for those of you that are good traders that would like to be a part of a community like this. And yeah, so that's something there too. But yeah, so if that's something that interests you guys, definitely go check the details out. The QR code is right there. But if it's not for you and this is something you like to do just on YouTube, that's totally fine too, right? But for those that need extra help, that opportunity is there. So yeah, again, with that being said, seems like everything that we have talked about so far is working out, right? It's doing pretty much what we expected. And you know, the reason I'm waiting till 6:30 or the next macro, I want to see how this sideways movement matures. How is this balanced price range up here going to be respected? Is this wick going to continue to be respected to the 50%? I want to show you guys something really interesting. So look at the bodies of the candles with this wick here, right? It's not allowing for price to continue to close above the 50% of that. That's significant, you guys. Okay? Like that's significant to see price telling us what it's doing, right? And another thing too, right? If we take this even more close to price, we have a low taken stops, high taken stops. This high to that low is also a breaker. It's also 2022 model, run on stops, shift in market structure, fair value gap. It's also overlap with this and with this reclaimed fair value gap. Okay, so 50% can't even get traded to. Why is this fair value gap here not being traded to? Why is it being left available? Same thing as this 1 hour fair value gap. It's just happening here on this lower time frame. Right, the upper portion of that gap does not need to be traded to. Why? Because buy side, sell side displacements overlapped one another. So what happened? Price came into it, hit the breaker, and it's delivering lower. Hit the 2022 YouTube model fair value gap, and it's dropping lower. Hit this reclaimed inversion fair value gap, which is also, you know, you can kind of see the reaction here from the yearly 25%. Right, it's holding price right there. Have we reached the invalidation level? Right? Being the 50% of this balanced price range? No. So what is happening? It's still remaining bearish for the moment. All right, so again, hopefully I've been able to explain everything thus far clear enough in a way that this stuff is like easy to understand and you can visually see it. This is something I love teaching about balanced price ranges because they are so visual, it's absolutely insane. And unless you're aware that this type of stuff is happening and unless you're aware of how this stuff operates, how it works, how it treats BPRs and what that results in, you know, it could be a little bit ambiguous, you know, especially when not many people talk about it as explicitly as I've just done, you know, from, you know, how it works, how it can be helpful with decision making, and then the use case, you know. Like, for example, this, right? It leaves open the fair value gap. How can you expect it to be left available? I just probably gave you the best gem you could possibly find outside of ICT's concepts or his lectures as far as why fair value gaps get left open, because they have balanced price ranges. This is also something that is useful in the model that ICT teaches called the institutional order flow entry drill, right? A lot of times, if there's a fair value gap like this that only comes up to 50% or less, there's trading in like a couple candles prior or one single wick, right? From one of these candles trades to the 50%, right? And then when price trades up into that fair value gap again, it leaves it available, right? Most of it. And of course, it's best to have a narrative that you're behind. Like for example, this, you know, potentially targeting the sell side. You know, it's still a bit risky to just assume because of the daily time frame, like where we're at. We sold the 50% here, so it's a little bit more risky, right? Doesn't mean that it's not something that would have been a possibility for an execution. Like, look, this already offered the 20-point threshold that we generally use on CPI weeks, on NFP weeks, right? We already offered 20 points there, right? If you use the low here, high, lower low, we had a breaker here. That offered well over 20 points. I think it was about 35. Yeah, 35 exactly, pretty much. Dang, that was a pretty good eyeball, huh? I just eyeballed that. Yeah, 20 to 30 points is just like burned in my brain from the last like 4 years. So yeah, you start to identify where they're at. But yeah, so let me look at the chat. Those relative equal highs from yesterday in Asian session. Yeah, I agree. They're definitely a possibility. That's for sure. We're going to need price again to really trade through this level for me personally to be confident. Just given what we've seen and the behavior that's happening, we're leaving gaps available to the upside as we go lower. So if we trade through this invalidation level for this particular price delivery here, right? If it continues to respond from this new week opening gap, look at how it's stopping price. This is an old new week opening gap from literally weeks and weeks and weeks ago. I think from last year, if I'm not mistaken. Yeah, it's from December 1st of last year. It just shows you that, referring to some of these new week opening gaps from a long time ago is pretty important. You can have them all on your same chart. Just make it so the lines are very, very thin. I wouldn't put like 1,000 of them. Just find the ones that are in close proximity. And again, with this weekend day separator, it's really, really helpful. You can just spot it almost instantly. Plus, you can spot weekly highs and lows too, right? Daily highs and lows within particular weeks. You can kind of see how that's useful. Right, so yeah. Good morning, Byron. What's up, my boy? You ready to kill it again, bro? Well, I don't think... Did you hop on with us yesterday? I can't remember if you hopped on the call yesterday. We had a pretty crazy day. Pretty crazy day. Let me see. Did I miss any questions? Exit 25,811. Yeah, so above 25,811, that's beyond the initial 50% level here too. So Mike, I think you're correct in what you said earlier. Guess I missed that earlier. So yeah, like I've been saying, if we stay below the 50% here, that'll continue to support the fact that the lows down here will be targeted. Do you see how this delivery is taking place here? Watch us go kind of do a comparison in here. So what I want to highlight is the high resistance low versus the low resistance low down here. It's kind of high resistance altogether. But even, even though it's all kind of nasty altogether, you could still see how the Dow had a faster movement, a more pronounced movement to the sell side, reaching for those lows. Right, we do got the failure swing in here, so the Dow should be the fastest one dropping lower, assuming that it does, look to favor sell side. Again, there is still potential life in the fact that the higher time frame may still hold in this area, right? So we're seeing early signs that the early signs being the 4-hour fair value gap and like being inverted, and then some of the other levels that have been taken that I mentioned earlier, like this low, right? We created a breaker here. We got a high, low, failure swing. So this low is even more important. It'll act as a mitigation block. We're seeing that this is being left available because of the trading that happened prior, right? So it doesn't have to come up there. We're seeing the respect to this inversion. We're seeing a pretty sharp move that's overlapped this too. So we'll see if we can get below this as well, this level, if it can hold. But we're seeing the lack of a failure swing in here. We do see trendline liquidity for later. But between the three indices, right, we have this lack of a failure swing in this. That's a high resistance signature versus a low resistance signature here. You see this, how it had a failure swing, how the move below it was really rapid. And do you see if this ends up going lower, right, with this lack of a failure swing, that's going to potentially give us high resistance. So you can kind of see how that behavior is already kind of began already. It's already started, right? It's having a very hard time looking to get down there. And if we do get down there, this is going to be a great example of low resistance versus high resistance. Low resistance here because of the failure swing, and then high resistance being here without the failure swing, right? This high and this high, it'll probably be high resistance to try to get up above that as well. It may still get up there if it was going to remain bullish, but because it has the stops already taken, it's going to have a little bit more of a friction to get through that. It may still, it could still get up there if we're going to see buy side delivery take place, which again, there's still a possibility of that. I think that we're more leaning towards the sell side here being targeted because of course we have the other indications too with DXY and whatnot and all these inverted levels and the gaps being left available and so on and so forth. But again, we have to continue to watch like this, how this is going to behave. And we have to continue to monitor this to the 50% of this level. Byron said busy week. Yeah. No trades locked in. Okay. Wait, are you off today, Byron? I can't remember if you're off on Wednesdays. Oh. Got a bunch of dogs barking in the outside. But yeah, so before we hit the open, is everybody that's here clear on what the narrative is, why the narrative is what it is, and what my thoughts are on the market, and why I believe what I believe? Are we all on the same page with these things? And if there's any questions, let me know. We are 8 minutes before the open, so we may have to wait a little bit just in case something reasonable takes place. Just throw a 1 in the chat if everything that I've mentioned so far is you've either gotten value from it or if everything makes sense. Or just throw 1 in the chat for one or both of those things. Okay, Joan said, yeah, Joan, you hear this stuff all the time too. You're in my private group. It better make sense. Oh, that's unfortunate. Nope, just tuned in. Well, you just go through the replay. Although I'd like to ask how often you make use of SMT, confirm validation. SMT is used a lot of times as a timing tool, or it's also used to validate a PD array. Like if we're on the daily chart, for example, and we have all 3 of the indices trading into an order block or something like that, and we have SMT showing up, that is highly likely that level is going to hold, right? Joseph tuned in late. Okay, yeah, we talked about a lot of stuff that's extremely important. So I do encourage you guys after the call, if you get a chance, get some time to go through it. And then, if you follow me on Instagram, or if you want to leave a comment about like a question or something, you can do that too. But if you follow me on Instagram at WMG Trading, you guys can hit me up with a DM and we can talk about things in a little bit greater detail. If you guys need any clarification, I'm pretty confident that I explained everything pretty clearly, in a very applicable way, and we're going to end up watching this. Talked about balanced price ranges, talked about why this 1 hour fair value gap was left open, talked about the logic with that, and a couple other things that are pretty vital. So definitely go look into that. And again, if you guys got questions about whatever it is that I talked about, just you guys can contact me in the ways that I mentioned, either here on YouTube in the comments or in a DM on Instagram. I'm also on X too, if you guys want to follow me at WMG Trading. I'm not really on it that much, but I'm getting on it more recently. And I get a lot of DMs over there. So and I don't have as many followers, as many messages. So maybe that'll be an easier way. Here on YouTube, though, I respond to every question. And if you give me a question that I think benefits everybody, I'll talk about it. I'll talk about it live on the next call. But for both of you, Joseph and I_ of God, I assume that means I'm of God, which is pretty dope. Given the fact that you guys are pretty new to this community, I go live. If you're not aware, I go live every single Tuesday generally. I'm not normally on Wednesdays, but every Tuesday at the same time, right? Generally 5:30 if there's news early, or 6:30 a.m. Pacific Standard Time, and 7 a.m. every Sunday. Where Sunday I answer every question that you guys can possibly have. That's why it's kind of a longer call. It's a review, but it's also a Q&A. And I'm going to start doing like smaller videos as well. Okay, perfect. Yeah, you have an awesome username, bro. I've been following you on Instagram. Yeah. That's my Instagram. I use that for like psychological stuff. Like everything that I encounter or study, because I continuously study psychological stuff every week. Like that'll never stop, no matter how much experience I get, because it becomes a constant mental management process. When you get more experience as a trader, I don't essentially learn much these days. There's not really much more for me to learn, other than how to get sharper with the tools that I already have that have been working for years at this point. I already have my whole process. I know how to determine bias. I know how to validate. I know risk. I have everything that I really need. And, so I'm at the point where I'm not going to really learn much more. I don't feel it's necessary. But psychological management is something you will always need to stay attached to, because life happens. Life is ever changing. And psychologically, you have to understand how you react to certain things and how it could affect you and how you get affected. And then based on that effect that, whatever is having on your psychology, how you're going to operate and defend yourself mentally from these things, so you don't break your rules, start doing things that are unnecessary. So it becomes a constant mental management. So that's why I have that Instagram page. I post some of my, highlights here and there, some stuff from these videos and whatnot. But for the most part, that's like a companion for what I do here on YouTube and in my private group. It's like a archive of all the important psychological elements that I've gotten through, So looking at the chart here, I appreciate you you following me, by the way, you guys. But again, looking at the charts here, we can pretty much see our objective. My initial overall objective is going to be down here. If we can violate this even further, seems like that's the case. Seems like we have been correct on our analysis that price could potentially continue to target this sell side. It's high resistance to get down below this low, as I mentioned. This could end up being a market maker sell model in here. We have the first distribution coming back down into this possible second stage distribution. So it may look to slide pretty quick. Maybe, because we have this run below the lows here first. That's a high resistance signature. So does that mean it'll 100% of the time not go very quickly through lows like this that are in line with the narrative? Not 100% of the time, but most of the time, right? This is the easiest way to identify if you have a high resistance liquidity run or a low resistance liquidity run. Something like this, if you're bearish, for example, right, that can be expected to be taken in low resistance fashion, right? And look at what it did. Low resistance, this is high resistance, okay? It's not necessarily in a hurry to get anywhere, okay? So, oh, damn, Byron, that sucks. Oh, man. Well, we'll be live tomorrow too. We're always live in the private group. So yeah, if we take a look here too, we have a large regular trading hours gap as well. I'm not sure if it's going to leave that open. If it's going to respect the overall analysis from this being left open, and then try to target the lows, maybe it leaves it open. It's pretty large. But it seems for now that things are still respecting the down movement. Look at that. Run on stops, shift in market structure, fair value gap. That's a YouTube 2022. So yeah, 630 has come out. I wouldn't execute right at the 630 on a week like this. I'm going to wait personally for the macro, but you could see, right, that looked beautiful. And if you were quick on your toes, right, you took that, it offered 30 points right there. Exactly. If you had your stop right there to trigger in right when it pulls you in, this low to that high, right? You could see how that was also to be respected as well or trusted. 50%, we have low, high, lower, low, buy side, sell side, balanced price range. And you could see what I talked about earlier about why fair value gaps get left open, the logic. You could see it happening again. We've pulled out 3 examples of this in just this call about how things get left available. Look at that. Beautiful, perfect. And yet again, we were correct on where price is going to reach to. You know, we've had a crazy streak since all of last year, every single week. Oh, Mike took the short. Bang. Mike is a savage, by the way, who started with me on YouTube. Joined the private group, and this guy is definitely turning into something special. It's amazing. It's amazing. It's amazing. Good job, Mike. Although I can't say I'm surprised, okay? You've been doing some incredible stuff lately. So good job to you and everyone that's been doing very well after being here with us. So let me ask you this. Did you take the 2022 model? Inside of this too, Mike, we could see the Razor model. I'm sure you can identify that, which is our personal model. Well, my personal model. I'm out. Yeah. I mean, dude, if you catch this type of run, why not? 20 to 30 points. Remember the rules for NFP and FOMC and CPI and any of these other news events like rate announcements and Fed speeches and whatnot. These are all times where we got to make sure that we get in and out 20 to 30 points because you just never know. So again, going back to the BPR idea that I talked about, right? It worked here with this being left open or us anticipating it to get left open. We also now have buy side here, sell side now. So 50% of this would be my line in the sand, right? Instead of this area, we would now be using this area to help further justify the price could continue to go lower. If it doesn't, it may end up going lower overall for the day, potentially, right? But if it gets above this short term, it may be looking to take out some buy side liquidity there. Preferably, we wouldn't want to see it, obviously. But yeah, I just saw the inversion of fair value gap. And yeah, exactly. Yeah, because you can see the components of the Razor model. You would have had to enter a little bit later than this. But nonetheless, the target here to seek this sell side being taken, it basically got taken out. But do you guys see kind of why I don't take trades right at the 630? I don't like it. This happens a lot when this type of stuff unfolds, like right at the 630. We definitely pierce that. So now again, we have to keep tabs on this 50% of the daily order block, right? If price gets up above that pretty dramatically, the interest for me to see this tip over will then start to turn off a little bit, right? So this here, again, if we do get up above this level and it gets above this fair value gap, this profile will be classified as a London swing to New York reversal. And again, it'll have basically turned off the likelihood of price looking to go lower and target these extreme levels down here. And again, this is why the higher time frame is so important. The failure in this, failure for this thing to really drop lower we're still inside the daily order block. This candle has not closed below the 50% of that daily order block. So the chance is still there. It's not 100% that it's going to go lower simply because of this. I mean, you can never really be 100%, right? You could be like, high 90%, like we prove we are generally. But, in times like this, you got to be really cautious. Off the heels of CPI, off the heels of the PPI, which is also very, very dramatic. Do we have news later? Wait, did that come out? Oh, wow. They removed the October data. I wonder why they did that, why they took it off. So there's some news adjustments taking place. There's a lot going on today. Supreme Court, there's so much stuff. So, yeah. Again, just more reason for us to be very cautious. So, again, we're above the 50% of this. So we got low, high, lower, low. So that whole range needs to be looked at. So the 50% was somewhere in here. Let's see, right? Is this just a last-ditch effort to unseat these traders? Remember, I'm not looking to go bullish in any real significant capacity. Why is it fair value gap not there now? Yeah, I'm not bullish in any significant capacity yet. We're really going to have to break outside of this. Okay. Jump to the other. Yeah, there it is. And let me keep my eyes on DXY. Switch to DXY. So yeah, this is a nasty move right there. The initial idea unfolded. Again, there was an opportunity there for those of you that did want to execute off of your own model using the context, if it made sense. One of my students, Mike, in the chat, he took that trade, easily bagged the 20 to 30. I think a little bit more was offered there too. 70 points was offered, 75 points from that move. We do have a fair value gap here that I want to watch. We're below the new week opening gap here. So if we stay below that, that's a good sign for this to continue. We now got buy side taken. If sell side's taken, that'll become a bearish breaker. I think instead of this, I think I'm going to use that. We could use the fair value gap there too. So yeah, this is a pretty decent contextual idea. It's also, yet again, respecting this. It's showing an unwillingness to come back up into these levels. I don't necessarily think that we're going to target the regular trading hours gap here. We're really, really below the 50% now. So again, the day is going to have to close below this for us to fully confirm that this order block is now null and void. Right? Until it does that, we still have to have the understanding that there's still a risk. Does it mean that shorts can't be taken even if there's still a risk? No, there's a risk for anything to happen at all times, right? But this is just one of those things that makes you really want to lower your risk a little bit further, right? It like nudges you to lower it and manage risk properly. So you don't just see it going lower and think, yep, I'm full 100%. Let's put my whole account on a short now because this happened, right? Like that's not ever the case, but especially not in a time like this when we're in an area that's going to be a heavily decisive area because there's so many PD arrays in here, the wicks, the new week opening gaps, the fair value gaps, right? The volume imbalances, so on and so forth. And again, breaking down below this low creates a bearish breaker. So that's another reason why this would be much more justified longer term to be bearish. We have the monthly open here. Pretty interesting how it dropped lower and then rallied up. We're halfway through the month, so we're in the middle portions of the month. That's where the expansions take place. So yeah, looks like DXY. Yeah, I like this right here. It's a pretty nice behavior. With work being done above there, it should be able to hold in this. And if it upsets this and goes back above, then I mean, that's just a testament to the somewhat nasty conditions. So let's see if it can't hold this in here. See, it seems like this whole run higher here may have just been, was it a wick? I think it was a, Now we got the sell side down there. Let me make that available. Whoops, just looking at the wrong chart. So we got wicks in here. So if this is going to be trustworthy, if order flow is going to continue to support price getting down to, say this level down here, preferably this up movement, down movement, this fair value gap overlap here, and the inversion fair value gap here should be able to hold price below, because that should be treated as a BPR. We see the wicks in here. That's a good sign. 50% of the wicks, 50% of this overall fair value gap in there is being respected. Beautiful move. Look at that. Look at that. What a beautiful move. You guys just witnessed yet again what we do on a regular basis. It's nothing new. Isn't it beautiful? Isn't it beautiful? Isn't that beautiful? I think it is. I think it's a masterpiece, honestly. And see, can you get that one extra punch down below that low? Let's see. It's got enough juice. Yep. That's enough for me, you guys. So I did engage that. Okay, and banger. Is that from 88 to 38 on exactly what I told you guys. Yet again, right? Houdini. This is so, it's amazing. It really is. It's absolutely amazing. Let me see the reaction to that, because that was pretty fantastic. Yeah, isn't it amazing to see all the stuff that I describe work out exactly the way it is described to work out? The balanced price range, this was good. All the stuff that led to this going lower, look at that, and full targets met. Full target that I had for the day is met. So honestly, I'll be done looking for any opportunities for myself. Oh God, I mean, that was just so beautiful. Remember what I said? We're in the 2 middle weeks of the month. What did I say at first? This this call probably is one of the most jam-packed, valuable calls that I've done on YouTube, probably ever. Right? Like I give a lot of value on this YouTube channel, so it's saying a lot. I've talked about some of the most critical things that allows me to do what I do on a regular basis, and the things that help me come out publicly last year and prove to the world or anyone that's looking that what we do here is up there with some of the best traders. Like we call bias and narrative high 80 to 90 something percent, 93%, I think it was. I have to go double check. I did a top step challenge, completed the challenge in 3 months with 88% accuracy, which is a case study that I have in the free group and the private group, which I did it for them, to prove that the things that I tell you, 20 to 30 points, you can knock that stuff down, and it's literally amazing. You can do anything you want with 20 to 30 points, right? So I've proven every single thing that I mentioned, right? I'm live every single day with my private group. They know this. Those of you on the YouTube channel, you see me twice a week, and you see this type of stuff happening all the time. Simply twice a week. Once a week, live trading. But every single week, you see me call, price is probably going to go here. This is probably the narrative. This is why it should. If it hits this, this is why it would invalidate. And then the stuff just plays out. So, I mean, I would take the stuff that we talk about here to heart, right? Take it to heart, go test it, then make a decision on whether, what you do here is worth your time. Because I want everyone to prove to themselves by listening to what it is that I talk about and study what it is that I show and make your own decision. I'm not on YouTube just for shits and giggles, right? I'm not on YouTube to, just be on YouTube. I'm here to give value, to try to pull you guys up. The world's crazy right now, and I'm trying to do my part and give back to the community and try to make the community as a whole, right, the trading industry, a better place. So I'm on here not wasting my time. I'm on here getting straight to the heart of the matter, especially on these days. On Sundays, we kind of, it's kind of a longer period because I'm answering questions mid explanation of things, which maybe I should wait for questions till after calls are done. But I don't know. I like engaging real time because then I don't want to forget the question. And what if you forget the question? It kind of makes it longer. But I don't know. Maybe I'll put a chapter. What do you guys think? Should I put chapters on the Sunday calls? Maybe even instead of doing like the faster videos, do you guys think I should just put chapter? I think chapters would be pretty beneficial, huh? I think chapters would be good. What do you guys think though? How can I make this an even better experience for everyone? I want your guys' feedback on that because that's what I did with the private group, and it's become an amazing community, and I'm grateful for that. Those of you in my private group over the years have helped me make it into what it is. It's very, very jam-packed with everything, and organized the way you guys said would be the best for you. So here on YouTube, what do you guys think I should do? Right, that would maybe make this a better experience for everyone. But yeah, that move right there was beautiful. We really have nothing more to push onto the market at the moment. So we won't be talking about another opportunity for a little bit. We basically called 2 relatively savage entries. The first one here, even if you entered late, I think it still offered a good amount. Even if you entered on this candle, yeah. Even if you entered late on that when I pointed it out, targeting the low, you did well. With the demo perspective, because I'm not a financial advisor. This ain't financial advice. But, pretty amazing. But yeah, if you guys think of anything, right? Yeah, I entered, Byron. Cool. course your boy entered. Come on, bro. Come on, man. Come on. Come on, Byron. You know the vibes, bro. You can make shorts. So after going over it, even now you can make short. Shorts just explaining. Yeah, that's a good point. People, oh man, that's an understatement. People don't appreciate the long vids, and that's unfortunate, bro. It really is. Everyone's got this TikTok brain. See, if I had the TikTok mentality that most people have these days, I would not be the trader that I am. Most traders would not be the traders that they are. It's because of the long videos that ICT makes and long videos that people that know what they're doing graciously come out here and create, giving that much time. It's those lessons that really get people moving in the right direction. Like for example, in the private group, we're doing hours long videos. When I'm one-on-one with students, we're on for like 2 to 3 hours each individually with my students that I work one-on-one with. Imagine if I treated that like TikTok, because people don't, for whatever reason, they don't want to appreciate the long videos. Imagine it would not have any of the progress that the students like you, Mike, have been able to acquire. It's really important. But again, it's kind of just feeds into the percentage of success versus failure in this industry. Are you able to sit and focus your attention on something for longer than 5 minutes? Because you're going to have to do it regardless when you're sitting at the chart. You're going to have to sit there and be patient on the chart, wait for it to tell you the information on the chart. So you got to think, like the content that you guys watch here on this channel, it's a little different because I prove it on a daily basis that what we do works, and I know how to teach it very easily. So it's easy to understand, easy to digest, and most importantly, easy to apply right away. At least most concepts. Some stuff takes more back testing, but like things I discussed today, you can go into your chart today, right when we get off this call, or just go to another asset on your own right now and go apply the things that we talked about today, right? All the different pieces. You'll see it pop off the chart now because you have now been gifted the awareness to some of this stuff and how a lot of this stuff works. So, it's definitely unfortunate. I like making the long videos because short videos make me feel like I'm missing something. I'm like, because some things require some context to fully understand it. That's probably why a lot of concepts that people try to teach don't make sense to a lot of people, because normally it's just like, here's the concept. Okay, well, what about the context? When is this good to use? Or like, when is it good to use this concept? Like, what condition? What leads to that thing being high probability? That stuff requires deeper knowledge, deeper explanation versus, oh, this is a balanced price range and that's what it looks like. Okay, what makes it important? When do I use this? How does this help me? How is it going to help me make a decision? Right? Like, oh, here's this model that, here it is. Here's how to get in, some of the pretext, and that's it. Okay, where is this best used? Right? Like, what does it look like on the higher time frame when I'm executing these entries? What am I supposed to use for context? That requires a deeper explanation. So you can see why when you watch a video that just has like a concept with no contextual idea around it, you could see why you go in and you're struggling and you feel like something's missing, because there is something missing. The deep context, right, that surrounds all the different concepts. An order block doesn't work just because it's an order block. A fair value gap doesn't just work because it's a fair value gap. A fair value gap doesn't get left open just because smart money decided to leave the fair value gap open, right? There's a deeper context, which we got into some of that today. So Some people, some content creators, I understand sitting with them long videos kind of is useless. And so it feels useless, or it feels like it's just a waste of time, because most of the time it is. A lot of these people are a waste of time to spend your time on. But what we do is proven through action, not just through me speaking. It's also proven through students and their results, the things that they find, the things that they say that they're getting better at, the results that they get off of their own actions, right? I just kind of glue things in place, highlight things that most people overlook about ICT Concepts. And I have my own little flair that I put on it, like the way that I organize things, which creates my model, which is the same for everybody, right? Everybody has their own little sequence or recipe that they use to piece all the concepts together, right? But the difference is with this community, I'm literally live every week. And in my private group, I'm live every day. And if I'm lying about that, I have, I think, 3 or 4 private group students on this call right now. And they would come out here and tell you that I'm lying. Mike being one of them, who took the trades today. Right? So if this stuff was not true and I'm just blowing smoke up your ass, talking nonsense, or if I was inconsistent, right, and not actually doing what I'm saying I'm doing, I'd be called out pretty expediently. Right? So, and I think you guys would agree with that. Some people do. Yeah, some people do. Some people do. Like you, Mike. And pretty much everyone in the private group. You guys are, and, a good amount of you guys on YouTube as well that hop on every week. You guys are serious too. You sit with me for hours while we talk about these things, So that's why you guys get rewarded. And I am happy to do it. I'm happy to see you guys succeed. Again, that's the main reason why I'm on YouTube. I could care less about attention. Although it's great if I can grow the channel, which I would like to do, obviously, because then that means I could be in front of more people. I can build more relationships. I can continue to, place my impact from the experiences that I've had, from the life-changing things that have happened to me. I can share that, and I feel good about doing that. It's something that just trading on your own and making money can't provide you. And that's kind of what I'm chasing at this point, right? I'm chasing impact in others. It's great that I can do this. It's not a shock to me. It's always good. It feels good, obviously, when things go where they're supposed to go. But I get that this feeling happens all the time now. Like every week it happens. Every time. Well, not every time, but all the time it's happening. And I've done it in front of people. So it's not just me saying it. And I know how that feels, and I know how impactful it could be to you as the trader to understand this and have clarity. I can't guarantee profitability, which is in no way what I'm doing, right? But I can guarantee you clarity in the market. And then once you have clarity in the market, you can imagine what could potentially be possible with your own hands. And you should feel good about that, You should feel good with the fact that you spent, 2 hours with me, some of you guys so far? You should feel good based on the fact that I literally outlined the whole entire delivery here. Literally. We had our invalidation levels, never got fully breached. Do you notice how price came back up to the 50% of this level here? And price closed there exactly at the invalidation level that I talked about? I said if it breaks through this level here, if it violates the 50% here and gets above it, or if it gets above this high here, we would not be bearish. And then it came up, closed literally exactly at the line in the sand that I pointed out, exactly to the line in the sand. And then immediately, rapidly overtook the fair value gaps again, creating BPR. Right? And then came back, inverted, and then declined. Right? And the execution was spoken about there. Mike took this and I pointed this out as the YouTube model. Check the rising funded traders. What amazing entries. How about this? Let's do it together, shall we? Let's give flowers to these students in the private group. As you pointed out, 40-point bag. It's first presented for value gap. Oh, where the hell did it go? $63. Yeah. Wow, he got the whole thing. Beautiful. I'm so happy for Fotis. I'm so happy. He's been with me literally. We had the same mentor, or like very early on, because I wasn't always with ICT, right? I had like a year and a half that wasn't with ICT, and we were doing like high frequency trading, and just different styles. And Fotis was with me literally from day one, and then our mentor unfortunately passed away at that time, and so me and Fotis stuck together, and I'm grateful that we did, because we've become really good friends. And I'm going to go visit him in Greece within the near future. But it's just so satisfying to see people that believed in me from the start, or just simply believed in themselves and looked to me to help them. It's a indescribable feeling to see students like that succeed in the way that they've been succeeding recently. And I've told them from day one, you just got to be patient with me. Be patient with yourself, more importantly, because what I do here, what ICT has shared, it works. There's no question that it works or not. It works. Okay? In the hands of whoever has the discipline and the dedication to really pour into it and study it. There's no question. There's more profitable, successful ICT traders than there are in any other style of trading. And that's not even up for debate. Okay? The understanding that we get as ICT traders is unlike anything else. It's so intense that even ICT shared something from the Nasdaq headlines that said specifically, traders that have been using ICT Concepts have been banking big. It was literally a headline in the Nasdaq, right? Which was insane to see the other day. And then, of course, Dodgy, shout out to Dodgy. He basically went, Dodgy, the young ICT trader on YouTube and Instagram. He basically went to Wall Street, literally. I went onto the trading floor and talked to some of the people there. And they were like, yeah, retail traders in 2025, for the first time in history, have bagged more of a return than in any time in history, above the institutional investors. So institutional money was outpaced by retail percentage gain by the end of the year when they added it all up with trackable, the trackable data, obviously. And there's stuff outside of the trackable data, people with offshore accounts and all that, or just simply people in funded accounts. Like, just think about it. If they did that with those two things pushed aside, just simply from the stuff that they can gather, all of a sudden, the first time in history, who's the one that's been pumping out the most content in the last 3 years? Who has the largest following for the most part on social media at this point with trading, with a specific realm of concepts, or at least one of the most, but has recently been pumping out massive amounts? It's ICT. So the impact of these concepts is undeniable. And then you hop on a call like this with a small channel with someone that isn't really known, who's been trading ICT Concepts quietly for 6 years, 6.5 years almost, and then just does this every single week. Look what was offered right here. Okay, I'm kind of salty that I didn't hold on to it, but rules are rules, right? CPI week, NFP week, it is what it is. But look at what's happening. This happens all the time. This isn't a shocker, okay? And students in the private group, if you want to mention in the chat just how much this is not a shocker, like you guys are with me every single day. This is a completely normal thing. It's not an everyday thing where we catch huge moves like this. 20 to 30 points, we point out an opportunity, like about 3 of them every single day. Does that mean I take a trade on them? No. Yesterday, I didn't take a trade. I called out 3 moves that went straight to profit privately with my private group. It's just so incredible these days. And there's undeniable proof that ICT's concepts work. So any stupid ass you see on the internet saying anything about it, ignore them, because it's a distraction from a blessing that's being put in your hands, you know? And there's people like me that are coming out here trying to add on to your ability to do this in the best way that I can, by being as clear as I can, pointing out the most important things, showing you this live in front of you before it happens, showing you times when I'm wrong and how I adjust, and then we're back in line with it, and then we point out an opportunity once we make the adjustment. That whole process is on full display for every one of you that is gracious enough to give me your time while I'm giving you my time. So ignore anyone that talks crap about this stuff. Okay, this is something that you don't want to let go of. All right. And if you may have been struggling recently, feeling like, oh, I don't know if I can do this, just stop. Just stop thinking that way. Okay. It's absolutely doable. I'm not anyone special. I dropped out of high school. Okay. I didn't go to college. Okay. I was homeless at one point in my life. If I can get through the things that I've gotten through and am able to do this, I'm not a mental giant. I'm just a normal person like you guys. If I can do it, why can't you do it? It's hard to think, okay, well, if ICT could do it, why can't I do it? Because he was like highly educated. He's a pretty intelligent individual, right? He's a computer coder, right? He's just a different type of persona, But, he was a regular person. He is just still a regular person, though, right? But looking at his performance, and like the things that he's been through, it's kind of hard to fully relate, but there's a lot of things you can relate to. But communities like this, channels like this that aren't huge, they're just normal people that hop on and hang out with you guys and then show you stuff like this, which is unheard of on a regular basis. I mean, it's a huge blessing that I hope you guys really, really, really dig into. And I really, again, hope that if you have been thinking lately that this may not be for you, if you've been struggling with the ups and downs, this is a community that you can confide in to go through that and get through that. Trading's not a team sport, and I never assume that it is. It's going to be you pushing the button. But with enough time spent in an environment like this, around people like this, obsessively digging into ICT concepts and seeing someone like me that shows it live every day, or like in my private group, you're seeing tons of students like Mike and Fotis coming out regularly showing that what they've learned is being applied and it works. We're all normal, just people. So if you're struggling right now, just think of this community as something that can help you. Put it to the test. There's everybody on social media that you could spend time watching. Some of them are more entertainers than others, right? Some of them, just kind of ambiguously show stuff, or they teach just the concepts with no context. Here you're getting everything. You're getting real time, consistent every single week. If you're in my private group every freaking day, you have the ability to ask me questions. And if I have the answer to it, I'll tell you. If I don't, or if I don't use something, I'll tell you. I can help you decide what's important, what's not important, what's like earth shattering to your process versus something that you can just slice off and not worry about it, move on to the next thing, right? Or, maybe you just have enough and you're just trying to confirm whether you have enough or if you should just keep learning, because that's hindrance too, right? Knowing when it's time to stop looking at all the videos, right? When do you have everything you need to the point where you don't have to go any further and add more stuff and make it more complicated? There's a point in time that all of you will reach that moment. I'm already at that moment. If I watch ICT's videos, it's because a student's asking me to review something that was talked about, or, it's just review, for specific videos. And if something new comes out and it's useful or can amplify to what it is that we already do without changing the process, then, I'll allow for it. But other than that, I'm not learning any new concepts, and eventually you won't either. Again, learning when you get to that point, though, you need someone to help you know that. You'll figure it out eventually, maybe way down the line. But if you kind of know what is required, what you should consider having in your process before you get to that point, you'll be able to reach that point a little bit quicker, And being around a community like this, although I can't take the trades for you, I'm lending you my experience. Okay, so it definitely does a lot for your progression in a faster pace. Obviously, success comes from discipline and all that. I can't force you to be disciplined. I can't force you to do certain things that are personal. But conceptually, right, understanding the concepts, I've proven for the last 3 years of teaching and being with students one-on-one and the private group and even here on YouTube, I've proven that I can help. And I prove that I can do it. I'm not just saying it. I do this like regularly, for those of you that may be new. It's hard to trust people. So, I feel I need to say this type of stuff because I also back it up. I'm not, imagine this for a second. I'm out here publicly on YouTube. If I come out here saying this and I don't really do it, how embarrassing would that be? Like, how embarrassing would that be? Like, I can't even imagine. I can't even imagine. You can kind of see evidence of, people on social media that don't know what the hell they're talking about coming out here and doing that. I don't know how they live with themselves, knowing that they're hurting people by teaching stuff that they don't even know how to use, which ends up hurting other people. But yeah, so let me see. You got some comments. Fotis. Yeah, what a journey, brother. What a journey. I'm grateful to have met you too, brother. I'm glad we stuck together. You're stuck with me, bro. It's too bad. We're stuck together. It is what it is. Yeah, patience and dealing with them ups and downs. Yeah, for sure. It's definitely a wild roller coaster, but it's so worth it. It's sweet. Victory is sweet after the toughest battles. It's much sweeter because then you overcome, right? You overcome the issues, and then you'll trust yourself moving forward. I think we will chop now. Oh yeah, I think it is a possibility. It is a possibility for chop. We are extremely deep now through this. So one thing to do, right? So since we took out this low, you see how fast this thing came off that low? I don't like to see when it does this. When we take out a significant low, or if we take out a significant high, look what happened here at the high when it came off of it so aggressively. Sometimes it'll pull aggressively off and then it'll still continue to go, right? Say this was going to try to be short, but, didn't necessarily, stay for too long. It just dug down into this and then kept going. Generally, when it takes out a low like this and it rapidly gets back above it, sometimes it could be a problem. It can continue, right? So we would have to see for this to confirm, yes, it took the low, but the next day we'd have to see it get down below that again to fully confirm. This is definitely something that would, it puts us in a good position to consider that it may be time to start looking for down movement. We can see at the moment, though, it's definitely pulling back on all these traders that were in the trade being successful, right? So it's definitely something to be cautious about. We're outside of the macro now, so the next opportunity I would look for, it did offer those of you in my private group, you could see the razor model showing up in there off the heels of what level? Is that a new week opening gap? Yeah, it's a new week opening gap right there too. And whoa. We set some relative equal lows there too. That's kind of interesting. We have the daily wick 50% level. We have the daily order block level that was taken out, so we're not even going to look at that anymore. Unless it gets back above the 50% or back above the whole order block, which I'm not too sure how likely that is. Not too sure how likely that will be, honestly. I would be more on the side of seeing if this wick in here, right, this large wick here that overtakes all of them, see if we could stay below that, stay below the 50% of the order block there. Preferably we stay inside of this range here, because now that we've peaked below that low, this whole entire thing becomes a bearish breaker. Can find the markup. So yeah, we definitely want to keep tabs on this. It's coming back to the 50%. Something to consider too, if it does like really ram up into here. If we break this high up here, I'll look at these equal highs here as a possible candidate to be targeted. And then maybe it sweeps that. And then, if we end up staying below this by the end of the day, like it could just peak up a little bit, take it, and then come back down. It would end up becoming a really nasty move. It was a very fast London. Okay. It really accelerated. So we definitely want to keep tabs on this high here. If we get up above here, we want to see how it would treat that if it trades back into that range, because if it breaks this high and trades back into that range and then immediately accelerates, then that would make me interested in us trying to target up here. And then all of this will have just been manipulation. It wouldn't be the first time that this type of thing took place, right? I mean, look at all of this that just simply traded down into this level, right? And then continued to run to the buy side. We are in a massively nasty condition on this weekly chart. It's very disgusting. It's back and forth. This is low probability conditions right away when you're looking at it, right? So the best moves up to this point already took place, and we got ahead of both of them. This sell-off here, then price came up, right? It offered 75 here. Easily could have targeted 20 to 30. I pointed this out around this candle because that's when we spotted it while we were talking about other things. But we targeted the low. Where was the low? Yeah, we targeted that low there. Oops. So that was a beautiful move. Here, let me actually take this breaker off. It's too dark. We can actually take that off too. Hopefully by now everything that we've talked about makes sense to you guys. Where the hell is it at? Oh yeah, this was the 50% from this low to that high. I think that we could remove that actually. So yeah, if we get up above this high, I will look at this as a possible market maker buy model, right? This up movement, down movement, that was a market maker sell model. This right here was a second stage distribution, like I pointed out. Again, I pointed all this out ahead of time in the moment. But if this does end up slapping through this high up here, ideally, if this is going to continue to go lower, it has from this low to that high up to the midpoint right here. That midpoint is ironically from this low to that high. That's a breaker. So it's trading into a breaker here, right? So that 50% level plus this high being taken, I would be considering these equal highs as a reasonable target. But that would just turn us into a pretty nasty condition. Again, it would, in that case, set up the London swing to New York reversal profile. And it will have basically came off of the weekly low here, or the previous day's low here from January 8th, right? Basically the low of the order block. basically take that liquidity and then, see a London swing to New York reversal, targeting the highs potentially. These are nasty up here. Look at that. So yeah, if this does hang on, let's go look at the DXY real quick. Yeah, DXY is kind of having a hard time. It's having a hard time getting or continuing to stay above the this monthly fair value gap, or it's having a hard time reacting from that level. And look, overlapping candles, automatically disgusting conditions, massive span of overlapping candles, disgusting condition. Obviously, it was pretty decent. This is a monthly chart. Actually, move to the weekly real quick. Overall, it's disgusting from a monthly basis. The daily looks a little bit more manageable. And it still looks like it's holding up there. So it still kind of helps support the fact that we should still be able to stay below. This could just simply be a retracement. Again, we don't want to see it break above this high. And again, that high is this in here, like we were pointing out earlier. So I'd say that if this gets taken out, that is a red flag. Remember what I said about the wicks overlapping things? That should act as a BPR. So we should not see price trade beyond this level if we're going to continue to trust that shorts are going to be viable. If it breaks this level, puts this in jeopardy. And again, that's pretty much right next to the level that we pointed out earlier. Think about the psychology here. Everybody and their mama is shorting. They saw this huge run. They think it's going to go lower. Okay. So they're probably trying to hammer shorts, right? Or they're in there holding on to the trade for dear life. And this is trying to attempt to scare them out. DXY is kind of picking up a little bit, so it's kind of good. It looks nasty in here, you guys. Nasty DXY delivery. So you got to be very cautious. Whoops. I think it was cut off, huh? Whoops. There you go. So again, let's keep our eyes here. The daily wick 50% level from a while back. If we go back to this time frame, it's the daily wick in here. That's what that red level is. Got the sell side that was taken there. We could remove that. Damn, I should have taken screenshots earlier. Did I send any? Nope. Sorry, let me post this and send it to the groups of people that may have not had a chance to get on. They still see what happened in this jam-packed call. I had another student, Nico. He took some trades too. Took some shorts. 1 for 1. That's not bad. Not bad at all. Okay. Sorry, bear with me, you guys. Appreciate the patience. I should have did this earlier. Ay, ay, ay. Yay. If you guys got any questions, let me know in the chat. We can kind of go into some stuff. Mind you, I already sent 2 banger opportunities, so I am not going to be pushing too hard. We still got some time till the macro too. So again, the macros are that important. You know, you could literally time your executions or plan your executions around those macro windows, and you can just rest assured that you're not missing anything if you do. Right? Yeah, again, thank you guys for spending time with me today. I know these calls can be long at times. And, you know, for those of you that are new, if you stuck with me the entire time, I appreciate the trust and interest. And I guarantee you, being with me regularly, even if it's just here on YouTube, this year your trading will change. I can't guarantee profitability. I can't force you to not overtrade and over leverage. I can't force you to be disciplined. Those are things I can't do, so I can't guarantee that. You know, and I'm not a financial advisor, so I wouldn't guarantee it even if I could. But something I can guarantee is clarity in the market. I teach clarity and how to achieve that. And for the most part, I mean, I think it makes sense that if you have clarity in the market, profitability is a possibility, right? It becomes much more attainable. So, and you just have to walk the rest of the way, you know? So yeah, any of you guys that are new, I know I've had like 2 or 3 new students today. Hopefully you guys are still here. That's a guarantee you can get from me, is the fact that you will gain clarity if you spend time here regularly. And again, if you want extra help, if you decide that you'd like to be with us on a more personal basis, on a more daily basis, because we're live literally 7 days a week, except Saturday sometimes. But every day other than that, we didn't miss one day last year outside of, you know, some Saturdays, going live, talking about price, you know, doing something, pushing you forward, right? So if that's something you want to do, instead of 2 times a week, with 1 trading day, live trading, again, the QR code, is it that way? Is it that way? That way? Wait, what the hell? Yeah, some weird notification just popped up. But yeah, whichever direction. That way? That way. Yeah, that way. You can click. You can scan the QR code or click the link in the description. You could get all the details about the one-on-one group or apprenticeship group. I open up one-on-one enrollments every quarter. Kind of depends too on the progress of my students at that time. If there hasn't been enough progress, we have to stick to the same group. I haven't had to do that or extend it, except the first year that I did one-on-ones. I had to extend it twice for 2 groups. But from that point on, it's just been, I mean, just right away, things just start to click. So yeah. I don't know what the hell this notification is. It's like distracting the crap out of me. Wait, you guys can hear me and see everything okay, right? I don't know why the hell this does this. I don't know if it's telling me the truth. Just so none of you guys are confused, this is what we said was the sell side invalidation. You could clearly see that all they did was come up here. Like I said, they want to come and take these people out. Everybody that was winning, everybody and their mama is selling. So what did they do? Ripped it to the buy side, unseat them. Now they're scared to get back in. So now what's going to happen? probably going to take out these equal lows here. So yeah. Oh wait, whoops. Opened it up again. Pretty incredible. Pretty incredible. Sorry, I'm just like looking at something real quick. So yeah, you may be wondering, if all this stuff happened and say you didn't take any execution, if it wasn't CPI week and I was willing to execute again, what would I be doing to try to get back in? Well, I'd be considering the context that I've provided you, how it's still not done going lower unless we were to invalidate it by coming up through this area, which would then probably rip these people's face off. And probably it would come up into here. If it takes this out, my next intention would be to target the regular trading hours gap 50% level. Because at the moment, we have a pretty nasty gap up there. Okay, so that'll be used later. So you want to keep tabs on that. In my private group, we have an indicator that highlights this stuff. But yeah, if it was to break this level, that would be where I would be targeting. And then if it was to break through that level, I mean, there's deeper levels too, but it's too far for right now. And given what we've seen, it's unnecessary to really believe that at the moment. It's still favoring downside, so there's no reason to distract yourself with the what about, what if that, what if this, what if that. It's what is it telling you right now? Buy side, sell side. All of this should be able to act as a already created balanced price range, right? Assuming that it's more likely to go lower. Assuming it's more likely to go lower. How would we be able to get back in now? So we've taken buy stops up here. We have a high here, low here, high, breakdown. This down candle should behave as a mitigation block. Okay, if we move up a little further, let's go see what else we got in here to go off of. Also have this. Okay. If it was to, here, actually, let's use this entire thing. We'll encapsulate the whole thing. This fair value gap down there, right? If we can stay below the 50% of this here, we may be able to see that act as a pretty responsive level. If we go to the 15-second, I'm sure we could probably find another entry using the tactic I'm trying to teach you or share with you guys. Basically, if you find a retracement that takes place that makes sense on the like an upper time frame that's going to potentially go lower, like this just took the highs to retrace and go lower, you would just look for your rules to unfold again, right? Where's the YouTube model 2022, right? Let's go back to the 1 minute. I know a lot of you guys can't trade the seconds charts, so there's a fair value gap in there, right? We did have a breakdown in here, gave a failure swing. SMT actually at those highs. Price broke down below this. Like I said, this is a mitigation block. So return into it here. These consecutive up candles that could be looked at as something to respect price. This one down here may also offer something. It's a little bit further along than I would like. This right here definitely offered something. Let me point this out again. You see this fair value gap? Do you notice how a large piece of it was left open? Based on what we talked about today, why would that be the case? Well, buy side, sell side. So what happened? It went up, institutional order flow entry drill. Just simply tapped into the fair value gap a little bit, right? Above this high. And then the move's been bearish. Like I said, I'm not bullish again unless we get up into this level. It almost got up there, so it probably scared people out. I'm not scared. All right, we overlapped all this. So what did I say that should be? Balanced price range. Has it come back up into that? Matter of fact, this low to that high, look at what it respected. All of this delivery has not wanted to come back into it. Right, and we're still not done. Oh, wait, whoops. Whoops, wrong. I was wondering why the hell the markups aren't there. So yeah, let me move up a little bit. So yeah, at a minimum, this gap that's been overtaken here up to this gap up here, right? All of that has been now overtaken by that. So if we're going to continue to go lower, and this is simply going to be just a stop run, if I was looking to get back in, this level here, the 50% of that, the whole range in there, we shouldn't see price get back through that. We should not see this fair value gap get traded deeply into. If it was to break outside of that, that's an early sign telling us that this may not really, on a rapid basis, try to get down below here. It may just stall out. And then, of course, if that displaces above that and then gets above here, that turns our whole intention around and puts us in position to target this. Right? So again, if I was to get in, this is something in here that I'd be trying to watch. We have a run on stops. There's now been a shift in market structure. Now we have a fair value gap that's overlapped with another fair value gap and up candle. So this midpoint should not be traded through. That midpoint is also in line with the daily wick 50% level that may look to be inverted. If it's bearish, this up wick that was used as support or a balanced price range to go higher, it'll now turn around and be potential resistance, inverted PD array. It's also in line with this beautiful fair value gap in here. It should be able to hold this. This is also a pretty high probability fair value gap, because if you were to break this wick into quadrants, that's a higher time frame wick quadrant. It's the 50% level. It's piercing straight through this PD array that we're watching to try to see if it can hold to try to target the downside. So if this does deliver, that's a reason why it can be potentially trustworthy. Okay, and then we got equal lows down here. So we'll see. And of course, if that gets upset, we have to consider if this high gets taken and if this high gets taken. If all that gets upset, we're going to be having to adjust. This is an early sign that we'd have to adjust if we get beyond this again, if it breaks through that, especially if we take this, especially if we take this. Okay. And this wick here, right, if it was to get back above that, it would not be being used as an inverted level anymore. For now, because we're below it, we got to observe the characteristics of inversion. Ideally, we don't get beyond that. We should leave a part of this open because it's already got this whole buy side delivered through it with the displacement. This is like validating whether we can trust a particular level. Like, these are some of the ways of thinking that allow you to validate a PD array of whether something is trustworthy or not, right? Like the relationship between all the different the price action, right? Candle to candle, PD array with PD array, higher time frame to lower time frame, how that all converges together. So yeah, and then a conservative way to potentially look at this as an opportunity, if you wanted to wait and confirm if this is going to hold, which is more than likely what I would end up doing, right? We would have to wait and see, how is this going to treat this fair value gap? And if it gets down below this, I would just need one little tap into that because I'd treat that as a bearish order block, confirmed by this delivery pushing lower if it was to push lower, getting down below this, and then that would be how I would end the delivery going into this, and how I would look to potentially, how I would potentially look to execute. It's freaking fly or something. It's like touch my leg. Well, so yeah, does that make sense? Let me know in the chat real quick. Oh, one in the chat if all that stuff makes sense. That should be kind of review for the, those of you in my private group. But any of you guys on YouTube, if, a lot of this stuff, it may be your first time hearing a lot of this stuff from today. So hopefully you guys are getting value. Okay, Joan, George. Okay, perfect. So yeah, this will be what I'd be watching up to the 8 o'clock hour. So for the next 20 minutes. And by the 8 o'clock hour, we'll be done. Oh, wait a minute. I missed a question. Hopefully, Eye of God, you're still here. Just finished 2016 mentorship. Still feels like I don't know if I have everything I need. Where do I go from here? Well, 2016, if you go to the 2022 model, I think that is pretty powerful. And then you can add for bias and narrative and a deeper depth of understanding and clarity you could get from what I do on Sundays, because that helps you with bias and narrative. It's like a master class on how bias and narrative works every single week. So if you're going through the 2016 stuff, make sure that you skim back over it and have back tested every single element, not just like watching the videos. You have to go in there and back test each thing that you've learned, because otherwise it's going to feel like, okay, well, conceptually, okay, I get it, but how do I apply it? That's where the back testing comes in. With those the concepts taught in the 2016 stuff. At the very end, he also gives you a very organized list of like a process for each style of trading and what's involved in it, or like what's involved in like your whole plan, your process, and what you could consider organizing it with. So definitely, if you don't understand each of the components that are in that month 12 breakdown that he shares, I think that's a good place to really lean into. Pick those categories that he outlines, each little component, and look at that beautiful delivery. By the way, right? So 2022 model is definitely something you got to master. I use Breaker's 2022 model, and then a specific model that I put together using ICT's concepts. I took PD arrays and I made my own recipe, which ICT says is possible. And the more experience you get, the more understanding you have about how a model is created. Eventually, you're able to create your own. And he explicitly says he gives us the ability to do so. And that he said that that's not stealing his stuff. He wants you to create your own model. He gives you the components. He gives you the breakdown on how to do it, right? What's included in some of the other models that he's created. And you just take whatever PD arrays work for you, whatever conditions work for you, build scenarios around that, back test it, find something that repeats, and then you have your own model. And that's what the Razor model is, and how I created it. And that's how you can create your own too. But yeah, so if you finish the 2016 stuff, make sure that you look over things that didn't make sense and really lean into those things. Make sure you're back testing pretty much everything that you've back tested in 2016 stuff. It's a lot of stuff. It's not something that you can do in 6 months or 3 months and then by completion feel like, okay, I'm supposed to know everything. It doesn't work that way. It doesn't at all. Because the markets are very, how can I describe it? The markets have the same dynamics happening on a daily basis, but the packaging looks a little bit different. the contents are the same, but the packages look a little different. And the muscle memory is very important. And that's what makes these calls so important too, because you get to build muscle memory while I'm sharing insights that you probably wouldn't get unless you had much more experience. Right? So this move in here, okay, you could technically classify that as a signal, right? I said that if it breaks down below this, I would have needed a return back into that, right? That's a way that I probably would have preferred. But I said that this was a balanced price range. We should leave part of this fair value gap open. Did that happen? Once it broke down below this candle, that's a change in state of delivery itself. That's an early change in state. So technically an entry could also have been taken in there if you got the response like this. And then of course it came down and slid through it. So keeping with our 3 trades per day generally, at least ideas that we pull out, at least 3 of them we could point out. Doesn't mean we take all 3. Like today, I only took 1 opportunity. This first one was called out. Mike definitely pointed it out a little more expediently than I did. And then I called this one out here. And then I just basically put you guys in front of this one too. Told you how that should hold, how unless price was to break outside of this first, this is a first invalidation, second, and then the third final invalidation for these highs to be either left alone or attacked. None of them got taken out. The fair value gap was left open like I anticipated and told you guys. And then we shifted market or changed state of delivery here, shifted market structure again here. This candle here could have been, something that maybe, excuse me, something that maybe could have been within reason. It'd be the lowest risk that you would have taken would be on this one in terms of how much risk you'd allow. This would have been the last move that wasn't chasing price because this candle traded up into a level that was a bearish order block. It's also, if you look in here, it's also a fair value gap right there. These up candles, right? It's also a bullish or a bearish order block. Okay. It's also a breaker, if I'm not mistaken. Right there. Low, high, took a high here, lower low. This right here is also something that I've referred to before called an algorithmic rebalance. It's something that ICT talked about a while back, a couple years ago. He only mentioned it one time, but this is also part of the algorithmic rebalance delivery. When price is close to a level and it gives like a very small retracement just to rebalance, right? A lot of times there's a balanced price range like this around there. Doesn't fill in the whole entire fair value gap. It's also kind of part of the institutional order flow entry drill model. So a lot of things are converging in here. And again, this wick, like I told you guys, this wick in here, this daily wick, it turned into a 50% inversion of the daily wick, right? And you could see that all of the literally almost every observation that we've talked about today has came to fruition. So, I mean, this has been a insane call today. I'm surprised that not more people didn't stick around for it. Because man, today was powerful. So much was learned, so much was shown in front of you. I mean, it's incredible. It really is. Look at the move that's happened here. It's insane. Yo, what's up? What's up, Hive? Oh, dang, no, long time no see, bro. But yeah, today has been absolutely insane. Okay. So those of you that stuck around, absolutely got a ton of value. This last call out, every single call out that we called out today worked out. Another 100% day. This short in here, I assumed shorts from the very beginning. If you go back and review, we crushed it today. So with the fact that this final thing got targeted, I think I'll leave it there. This is very much worth a review. If you guys weren't here the whole time, I mean, if you don't watch the whole review, I mean, you're missing a lot. You're missing a lot, that's for sure. Because I talked about so much stuff today that will 100% improve your trading, undeniably. Okay. And I could say that confidently because all my private students that I work with, some of the things that I've shared today were pieces that pushed them over the edge. From I don't understand what the hell is going on to, oh my gosh, it just makes sense now. I can track price, I can follow it, and I can be confident. Right? So yeah, insane. It's absolutely insane. But yeah, so it's already 8 o'clock, you guys. So I guess we will put a ribbon on it this time. Thanks again for hopping on and supporting the channel. Again, those of you that hopped on late, or maybe weren't on since the beginning, I encourage you guys, if there's no video that you rewatch of mine, this is one that you rewatch. This is absolutely one that you need to rewatch, okay? So, yeah. Hive, definitely shoot me a DM on Instagram. We definitely got to make some plans, that's for sure. But yeah, so again, with that being said, God bless you guys. Watch the replay. Let me know if you guys have any questions. Today was an absolute banger, okay? One of the best calls that we've done in a long time. I mean, they're all pretty good, right? But today was special. Today was very special. It really was. And it's a day that most people probably don't know what the is going on. It's a day after chaos. It's a day that I'm probably going to get more messages of, oh, I lost this and overtraded and didn't know what to do. And I thought it was bullish and all this stuff. I guarantee you it's going to be one of those days, unfortunately. But, that's why you got to hop on these calls, because you never know what amazing stuff is going to be talked about. And every day there's something to learn, just like there is in my private group, right? Every day. So yeah, with that being said, God bless you guys. Thanks again for hopping on. Thanks for supporting the channel. A lot of you guys have been with me for a while, so I appreciate that. Glad you guys get value. Those of you that are new, like I said, the guarantee that I can leave you with is the fact that you will gain clarity from being part of the WMG family, okay? So yeah, with that being said, I will talk to you beautiful people here on YouTube on Sunday and in the free Discord. And those of you in my private group, y'all know the vibes. I'll see y'all bright and early tomorrow, and maybe today, if I have enough time to do a live Zoom call. Okay. So yeah, I'll talk to you guys on the next one. Take care.